trade discount, cash discount, petty cash, columnar petty cash book and cash Imprest system. Dear students, today we will discuss about the distinction between trade discount, cash discount, petty cash, columnar petty cash book, Imprest system of petty cash, and how to record petty cash transactions by way of an illustration. Distinction between trade discount and cash discount. Trade discount is an allowance made by the wholesale dealers to retailers of the catalog or invoice price. The object of trade discount being allowed by the wholesale dealer to the retailer is to enable the latter to sell the goods at the price mentioned in the catalog price or issued by the wholesale trader. The trade discount would enable the dealer to meet all the necessary business expenses and yet leave him a margin of profit on his sellings at the catalog price. The amount of trade discount allowed varies considerably according to different trades and even on different articles in the same trade. Distinction between trade discount and cash discount. Again, in the books of wholesale dealer, trade discount is deducted from the outward invoice sent to the retailer and the entry in the sales book is made of the net amount because the actual amount realizable by him is the catalog price less the trade discount. Similarly, in the books of the retailer, the entry in the purchase book is made of the net amount, the amount for which he is liable. Thus, trade discount as a rule does not appear in the books either of the seller or of the purchaser. Cash discount is an allowance in addition to the trade discount made by the seller to the purchaser, provided the latter settles his account promptly or within a specified time known as the period of credit. This allowance is for the prompt payment towards settlement of account may be either receivable or payable. Petty cash. In a business where all receipts are banked and all payments are made by checks, it becomes necessary to maintain a certain amount of cash in office to make numerous small payments on account of expenses which have to be made in the course of each day. Besides, as these payments are of frequent occurrences and individually of small amounts, it would seem undesirable to burden the main cash book with entries in respect of such small and sundry items. It thus seems expedient, even when the cash book is provided with cash columns, to maintain a separate book termed the petty cash book to record petty disbursement by way of cartage, coolie, hire, cleaning, postage, telegrams, stationery, general expenses, etc. By the use of this form of petty cash book, the postings need not be made individually but with the periodical total of each head of expenditure as shown by its corresponding column. Columnar petty cash book. The best method of recording petty cash payments is to enter them in a petty cash book maintained in a columnar form, that is, with a separate column for each usual head of expenditure and a column for the total. The advantage of columnar petty cash book is that it saves an enormous amount of unnecessary work resulting from posting each item of petty payment separately in the ledger. This book is also known as Analytical petty cash book, as the various payments get automatically analyzed on being entered in their respective columns. The petty cash book is written just like the cash book, the amounts received by the petty cashier being entered on the debit side and the payments on the credit side. While entering the payments, the amounts are shown in the columns to which they relate, as also in the total column. Every item of expenditure is shown in detail and is supported by a proper voucher. These vouchers are numbered seriatim and their corresponding numbers are shown against the respective entries. The excess of the debit side over the credit side on any date would represent the unspent balance of petty cash with the petty cashier. Imprest system of petty cash. The best method of maintaining petty cash is known as Imprest system. Under this method, an amount estimated as necessary for the possible needs of the business to meet the petty expenses for the week or the month is drawn by check and handed over to the petty cashier. At the end of the fixed period or earlier, when the petty cashier comes to the end of his resources, the petty cash book, after being totaled and balanced, is presented by the petty cashier to the cashier for fresh check. The cashier, after satisfying himself as to the correctness of the record, issues a check for the exact amount expended. The amount of this check, together with the unspent balance, will restore in the hands of the petty cashier the original sum with which he was started. This is called the Imprest system of petty cash. The main advantage of the system lies, in fact, that the cashier, being responsible for drawing a check for the exact sum representing the total disbursement for a given period, must necessarily examine the petty cash book to make sure that the amount is correctly arrived at. Besides, the fact that at each periodical interval the petty cash book has to be produced to the cashier for his inspection will in itself act as a healthy check on the petty cashier. Thus, a combination of Imprest system of petty cash and the analytical petty cash book would help to regularize and facilitate the double entry record of innumerable small and sundry disbursements. Record of petty cash amount. Record of petty cash account. All checks are issued by the cashier to the petty cashier or debited to the petty cash account from the cash book in the first instance. At periodical intervals, the analysis of petty expenses as indicated by the analytical columns of the petty cash book is analyzed, each normal account concerned being debited with its respective total and the petty cash account being credited with the total petty payments during the period. The result is that after such generalizing, the balance as shown by the petty cash account in the ledger at any periodical interval must necessarily agree with the unspent balance of petty cash with the petty cashier as indicated by the petty cash book on the same date. Illustration. Enter the following transactions in a petty cash book with analytical columns. The petty cashier is started with an impressed amount of 5,000 in the beginning, and the further transactions, that means further payments, petty payments made by him are listed here date-wise from January, for the month of January. So let us solve this illustration by entering each transaction one by one and explaining each transaction in a separate sheet. Solution. The petty cashier is started with an impressed amount of rupees 5,000 received by check from the cashier. So this is the initial amount received by the petty cashier for his petty cash maintenance. So he has to record in the Columnar petty cash book on January 1 to bank check received in the amount received column 5,000. January 2 he spent for window cleaning 200 rupees. So he has to record January 2 buy for window cleaning rupees 200 in the office expenses column. Here he has opened various columns for each type of expense to record his petty cash payments. So on January 5 he paid wages to office cleaner 1,200. So January 5 buy wages to office cleaner 1,200. This is an office expense, so he recorded in office expenses column. On January 8 by transportation charges to office clerks 550 he has paid. So he has recorded in traveling expenses column 550. On January 10 by 10 dozen envelopes and letter papers 800. This he has recorded on the printing and stationery column. On January 11 he incurred again for printing charges and letter papers 250. So he put this in again in the stationery column. January 12 by box paper fasteners 50 rupees has been paid. So we have to record this in again printing stationery column 50 rupees. On January 13, he paid for taxi fare to manager 100 rupees. This is a traveling expense, so he has recorded in traveling expenses column. On January 17, he paid for cartage and coolie 4 cases of tea, rupees 60, so he recorded in cartage and coolie column. January 18, 1 dozen ball pen pens for office use have been purchased for 250 rupees. This is again a stationery item, so he recorded in stationery column. On January 30, he paid for advertisement in Times of India 350 rupees, so this he reported in the advertisement column. On January 31, he paid 750 rupees railway fare to manager to Pune, but this is again a travelling expense, so he put in the travelling expenses column. After the month is over, he all the total expenses column, each item of expense column separately, and then when the total of petty cash expenses comes to 4,560, comprising of 60 rupees cartage, 1,400 office expenses, 1,400 travelling expenses, 1,350 printing and stationery, 350 advertisement expenses. So he left with a balance of 440 rupees out of 5,000 rupees. So he has to carry forward this balance for the next month. So then he will close the account by recording by balance carried down 440 rupees, total 5,000 rupees. So in the next month, February 1, he has to carry forward, brought down this balance, two balance brought down 440, and again once he will receive a check for total expense of 4,560 as a reimbursement from the cashier. So total put together again he will have 5,000 rupees for the month of February to incur petty expenses. In the next lecture, we will discuss about purchases book, sales book, purchase returns book, sales returns book, bills receivable book, bills payable book, journal, ledger, and subdivisions of ledger.